Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin managed to hold on to that 23,200 mark, although
Correct.
it was a very, very choppy session. Two times, in fact, twice we slipped into the red, but we did manage to recover from the day's low, and 23,146. That was the swing low that we made yesterday, but we did manage to close higher, and 23,200 that holds. As of now, although the sentiment is more towards sell on rise, and that did play out today as well, but some of the dips were also bought into. Mid cap index outperformed for a second straight session. The advanced decline ratio thankfully was in favor of gainers, although 1:1, that was the kind of advanced decline ratio we saw today. Nifty bank index also saw good traction early on, but it gave up most of the gains, although it did manage to close in the positive zone as well. But Yatin, when we started out, it was a pretty strong start. It was a triple digit up move on the index. All the sectors were trading in the green, but as we progressed, we saw some of the pockets like autos, pharma, FMCG come under selling pressure. But what held out was the IT pack. Yesterday, of course, it saw quite a lot of drubbing, but limped back today, so to say. 7 to 8 tenths kind of percent kind of gain coming in on the IT index. Metals were also buoyant, and the realty pack ended with good gains. In terms of movers on the index, you had Trent that has snapped out of an 8-day losing streak. Good momentum there after the kind of sell-off it has seen recently. So that was the top Nifty gainer, followed by NTPC, Power Grid, Kotak Maruti, which saw an upgrade from BOFA to buy from neutral. That stock was also up and about, bucking the trend because the auto pack was in the red. Tech Mahindra and RIL ahead of numbers, managed to see good 1% gain coming in. On the flip side, M&M, Bajaj Finserv, Axis Bank, Bajaj Finance, Shriram Finance, HDFC Life ahead of numbers. These are some of the losers, but Axis Bank ahead of numbers has slipped to the lowest in 14 months. So earnings, of course, tomorrow, that will come out after market hours, Yatin, but still that stock will be watched out for. But Yatin, quite a few movers in the broader end of the markets. All the PSU banks that were rallying yesterday came under selling pressure.
Yeah, and precisely yesterday what we explained is that the move was unprecedented. The government was looking, or probably looking at allowing these smaller banks to raise capital. People probably mistaken it for government divesting stake. That was not the case, and hence the correction. Central Bank, IOB, IDBI, all of these stocks which went up 20% yesterday lost nearly 8 to 10%. What was not doing well was Kalyan Jewellers, and from levels of nearly 800, the stock is now close to 550. So a decent loss in market cap of nearly 30,000 crores. So good correction coming in for that stock as well. Obviously, in terms of gainers, we had stocks like Anantraj, Newgen Software, Elecon Engineering doing well in trade, 8 to 10% kind of a positive move coming in. BSC Limited, and today Nuvama came out with the initiating coverage note on this stock after Jefferies. Another 6% move for that stock. Zomato was doing well, 4% up for that stock, and Adani group of companies also doing well. Adani Power and Adani Green, top traded counters on BSC 500, NSE 500, and nearly 2% gains for those stocks as well.
Right. Yeah. Yesterday itself, we were talking about BSC. Now another upgrade coming in. In fact, another initiation of coverage coming in from Nuvama there. But Trent, that's one stock that should be talked about. In fact, on my list today, we have fashion and beauty. That's dominating my list today. So let's start with Trent, then fashion and beauty as well. Of course, the stock has snapped out of an 8-day losing streak. In fact, since the start of the year, we've seen the stock come under a fair bit of selling pressure. But there's a very bullish report that has come out from Elara Securities on Trent, wherein they have initiated coverage with a buy rating, and the target price is at 8,500 rupees. Which is which implies an upside of almost 40% from yesterday's close price. Trent, Elara believes, is the leading player in India's retail industry. It is a cut above the rest if you go by the report. That's what they have to say about this particular company. Of course, Trent manages well-known brands like Zudio as well as Westside. Now, Zudio is set to grow ahead of peers according to Elara, despite the intensifying competition in the space. You have new entrants also like Vijal Megamart that have listed, and their price points are also pretty reasonable.
Correct.
But Trent, of course, is expected to grow according to Elara, even though at a modest pace. It has many moats, business moats that has been pointed out by Elara. Let's go through what the moats are. Differentiated fashion, their private label strategy, as well as affordable price points. These are the three business moats that Elara has mentioned. Of course, the private label strategies has been pretty successful for Zudio. It has robust traction that has been led by differentiated fashion as well. And of course, there has been a prudent focus on product quality. At the same time, price points are fairly reasonable, and the company has also been focusing on organic growth. Now Zudio is expected to be the leading fast fashion segment, said to be leading the fast fashion segment by a wide margin due to the edge that it has. Now Zudio in fact, it is leading the fast fashion segment with a 31% CAGR through FY27E expectations. Rather, that is the expectation from Elara. In fact, the share of fast fashion in the apparel industry is expected to go up to 14% from the current 10% over a period of FY25 to FY27. Strong store penetration, same store sales growth, as well as appeal among the Gen Z is expected to drive growth for Zudio. In fact, the company also solely relies on their private labels. That's another differentiating factor. It also has emerging brands like Mizbu, Samo and Utsa, and also it has forayed into the beauty segment with Zudio Beauty. And let's not forget about the lab grown diamond segment that has entered into with its own brand, Pome. Now, at a time when other fashion companies are focusing on their internal issues, this particular company, Zudio, is focusing on organic growth, and that's something that has found favor with Elara. In fact, it is also hoping or expecting the company to expand its brand portfolio with prudent capital allocation going forward. And Elara also expects a revenue, EBITDA and adjusted PAT, compounded annual growth rate of 27%, 29% and 38% over FY24 to FY28. Now, it also believes that quick commerce players will not pose a threat, given the fact that there is a constraint, the kind of constraint of store size that the company has. Westside as well continues to deliver steady growth, but there are certain risks also that have been pointed out by Elara, and those are slower store addition, the price wars, between all the players, and the failure to adapt to rather fashion trends. But looking at the stock of Trent, of course, it has seen a phenomenal rise.
Correct.
But since the start of the year, it had been under a fair bit of pressure. But today, it has broken out of that bearish trend, and clocked in a rally of 4% or so.
Clearly, a good move coming in for that stock. But stocks like HDFC AMC were also to be on the focus list, because the quarterly numbers have come in yesterday post with the brokerages are sounding slightly positive. In fact, HSBC has a target of 4350 and Nomura has a buy call with a target of 5250. Now, if you talk about HSBC, the overall numbers have been on the positive side. In fact, if you look at the AUM growth and the profit growth in Q3, that has been quite strong. Overall, if you look at the AMC business, obviously because of markets moving higher, the SIP book as well as the NFO launches have been doing well, adding to the AUM growth. Nomura, on the other hand, believes that the higher operating revenue has led to a 6% beat in operating profits, because probably operating leverage here is at play. They have raised the EPS estimates for FY27 by 3%, and the intakes of SIPs have been rising steadily. Obviously, for some mutual fund based on performance, there has been a shift in market share, but it doesn't really matter, because the entire pie has been getting distributed among AMC companies. In fact, if you look at the operating CAGR of nearly 20% is expected for the company for the period FY25 to FY27. So, on the back of strong operating performance and momentum in the overall markets, probably AMC companies also benefit. We also have the stock exchange stocks like BSE doing well, brokerage stocks doing well, and now AMC stocks also have shown good numbers. Obviously, it will depend on the market trends also as to how really we shape up. But yes, AMC companies really benefiting out of the rallies and the positive momentum in the retail book.
Well, that's about the AMC companies, but the growth in SIPs and equity mutual fund flows have been good, but they have kind of slowed a little if you look at the month-on-month performance. Perhaps that is something that could keep valuations in check. That's something that brokerages have also pointed out. But another fashion company on my radar today. As I said, it's all about beauty and fashion for me today. So it's Shoppers Stop. Great set of numbers, but the stock didn't really, couldn't maintain the kind of momentum that it saw. So yes, it ended the day in the red. The stock had earlier hit 10-week high in the session, but numbers have been fairly good. If you look at the numbers, after 2 successive quarters of losses, the company had actually swung back into the black, so to say. The net profit grew at 41%. And revenues also rose 11.5% on a YY basis, and the sharp rise in net profit on a quarter-on-quarter basis is something that one should take note of, because on a quarter-on-quarter basis it saw its revenue jump, its bottom line jump 4 times almost, because it reported a loss of 20 crores in the previous quarter. Margins also saw a 20 basis point expansion on a YY basis. Other income also surged by leaps and bounds to 22 crore rupees vis-a-vis 3.5 crore rupees on a YY basis. Now, it was a volume-led growth for the company. It saw a volume growth of 9%. There was a strong demand for premium products during the festive season in particular, and segments like watches and perfumes, they saw good traction. Premium categories contributed to 64% of overall revenue in the third quarter. Watches, handbags, fragrance, these are some of the categories that were outperforming. Beauty sales, was up for 3% on a YY basis, and even fragrance, for that matter, grew 14% on a year-on-year basis. Now, we have seen the emerging trend of consumption slowdown, the urban consumption slowdown, but premiumization as a trend is intact, and that is what is being reflected in the numbers of Shoppers Stop as well. Because it saw growth in premium segments like fragrance, handbags, watches, etc. The like-for-like growth for the company was 4%. It has a total of 59 stores across 25 cities, and in the quarter, it opened 16 stores. Of course, as I mentioned, the stock saw good recovery today after months of not doing well, but gave up, couldn't really sustain those gains. Although the management was on CNBC TV 18, and they've said that the momentum that they saw in Q3 has extended to fourth quarter. So numbers in the fourth quarter are also expected to be good according to the management, and they have set a target of 5% like-for-like growth in the coming quarter. They are aiming for double-digit growth in the beauty business. Private label in apparel should increase from 18% to 21 to 22%. That's some good commentary coming in, and they've also taken note of the fact that premiumization as a trend continues. They've also launched their beauty brand Joyology, and they are seeing good traction as of now. But let's see, since the management was sounding bullish, let's see whether the momentum continues in the fourth quarter or not. If yes, then who knows, we could see a fashionable rally emerging in the shares of Shoppers Stop. But today's up move completely faded towards the end of the session.
Absolutely, and retail stocks are expected to do well because this is the festive quarter where typically a lot of momentum is seen in overall sales. Let's see how other retail giants report numbers, and obviously we also have Reliance Industries coming out the numbers tomorrow, Nandita.
Yeah.
And obviously expected post market hours. Let's see what the big boy has in store for Q3. Numbers are expected to be good. We'll probably try to address the preview tomorrow. Yeah,
that's true, Yatin. And a big chunk of Nifty earnings tomorrow: Axis Bank, Infosys, Reliance Industries. So yes, although we'll be reacting to most of it on Friday, but tomorrow all these 3 stocks will be in focus. Action-packed rest of the week left for us and for the viewers and traders as well. But with that, we've come to the end of this edition of Closing Bell. I beg your pardon. Thanks a lot for tuning in. Stay tuned. Have a great evening and come back and join us tomorrow again.